Are you a veteran? Are you a first or second time homebuyer that could possibly get a FHA loan? And the reason I ask is those two loans are what's called assumable. So years ago, 3 or 4, when the rates were 2 and 3%, and everybody was on this house buying frenzy of getting these fantastically low rates, a lot of people were veterans or got FHA loans, and they are now able to be assumed by the buyer. This is fantastic news in the fact that you can keep that really, really low rate. However, there's a catch. With assumable loans, both VA and FHA, you as the buyer have to have the rest of the cash to bring to the table to make up what the loan value is versus what the house is being sold for. It cannot be another mortgage. It cannot be a personal loan. It cannot be any type of loan. You have to have it in cash. So the positive is you get the same rate. However, if the mortgage is $250,000 and the seller is selling the house for $350,000, you have to have $100,000 worth of cash to plunk down on the table to be able to assume that loan. The other piece of an assumable loan is you have to qualify for the loan. So the loan no longer goes through your favorite lender or goes through somebody that you know. The loan has to go through whoever is holding it. So if Mr. Cooper, if Penny Mac, if Citizens, whoever is the loan servicer, you have to go to that loan servicer and apply to be able to do this. The last piece of this is it usually takes 60 to 90 to 120 days to assume the loan. The piece that cuts out most people is the amount of cash that they need to take from loan to what the house is being sold. That amount of cash a lot of people don't have on hand, and so that's what stops the assumable loan from happening and being able to be assumed. But if you have that cash, that might be a great option for you, especially if you're a veteran and want to keep those 2 and 3 interest rates. I mean, you can't get them nowadays, and I don't see them coming back. So if you got the cash, this could be really good for you.